Good day, everyone. This is David here, doing the first video of our a new series here on YouTube and other channels that we'll be posting online. First video here today. It's Saturday, May 7th, 2022, and just want to talk about the economy and the Federal Reserve. Recently, on May 4th, I put up an article after the markets closed, which was a big update for the market after the Federal Reserve and Jay Powell had their conference or press conference to discuss, their next moves on interest rates and their overall monetary policy. And they announced a 50 basis point increase that they're going to be doing for the federal funds rate. And pretty much in that meeting, Jay Powell, he talked about, making sure the economy experienced a soft landing, or in the markets too, a soft landing, and with their interest rate increase policy, which it looks like they intend to do 50 basis points at every meeting. So, and it seemed the markets took that comment as positive, that he was going to keep an eye out and be careful with these. So the markets went up significantly. However, on that day, I felt like the market's not exactly taking a look at what's going on in the economy and the path that the Federal Reserve intends to take. And it was my belief that the rally would not be sustained. And the next day, the market's pretty much lost all the gains made the previous day and has gone down more since. So, right now the U.S. economy is facing very challenging conditions, and the markets are going to take a look at that, which they are. And the deteriorating U.S. economic situation, and around the globe also, combined with inflation and the the Federal Reserve's tightening policy, it's all going to be tough for the markets. So yeah, I just wanted to reflect on that. And I think going forward, it's going to be tough for the markets to have continued gains, as has been going on since 2020 after the pandemic started. And I don't believe that, we'll be able to have at least new gains. Most likely we're going to continue to drop from here until the Federal Reserve, either decides to stop its policy, which would be very tough because, they want to kind of put a damper on inflation. And the only way to do that is going to bring the rates back up. And we're already seeing in the mortgage market rates of 5.27% according to Freddie Mac, and that's the highest since 2009. And the Federal Reserve has not really started its interest rate increases yet. So what's going to happen once the Fed gets a 2.5 on the Fed funds rate, and but in the interest rates are also being affected by inflation, and investors are looking at that and requiring higher yields to compensate for that. So I just wanted to give a quick update on that. That'll be my first video here on the series. There'll be probably more audio ones than me on video. So I guess I will see you in the next video. Have a good day.